What I think fewer people look on is when a trend gets extrapolated. So, not to get all math nerdy on it, but a second derivative move happens and it either accelerates or decelerates. What I really enjoy looking at is making a call right then and there. Is it going to mean revert to trend, or is this a trend change? And so, a really good example of this coming from a semiconductor guy is NVIDIA. So if you look at NVIDIA, this is a case study on a growth story. If you look at x86 processors and Intel's dominance, it moved to parallel processing on the graphic processor side, GPU side. And the question was, how big was that going to happen? It was big, and it existed for over a decade before NVIDIA's real story happened. And what really happened underlying that story was an extrapolation of growth. So that cadence of Moore's law accelerated on the GPU side. As soon as that happened, there was a change in growth curve, and there was a technological reason that you could look at and say, it's different this time. This is not going to mean revert. This is going to be a new trend. So when you can identify that and build a lot of confidence in it, you can make a big bet and then analyze the ecosystem behind it. So that's a good example of a stock that, and a story that, is what we look at, which is a trend. Trend is your friend. Pick something that's got positive momentum behind it. But then after that, that's the market's pretty efficient. So you might make a little more money on that if you're a growth investor. But where you really make outsized money is when there's a move off of that trend in either direction, and you're making a call for it to either mean revert or break to a new trend. And that's where real alpha is generated.